UK retail sales as a whole continued to grow at the end of last year thanks to a late rush for Christmas presents and food. Like-for-like sales in December rose by 1% from a year earlier. Online sales of non-food products grew by 7.2% to nearly a quarter of all sales. But that was still a slowdown. It was the first growth below 10% for 4 months. And the British Retail Consortium, which compiled the figures, pointed to challenges ahead from rising costs and political uncertainty. Helen Dickinson is the BRC's chief executive. So, Helen, on the whole then, you're saying Christmas went pretty well?
It was a strong end to 2016. Bit of a roller coaster year, though. So 2016 retail sales grew more slowly than they had in the previous year. So a good Christmas, but in the context of a sort of slowdown in spending.
Yeah, it was a sluggish 11 months, and then Christmas really made up for it.
It did. In fact, the Christmas week was bigger than Black Friday, which is the opposite to what happened in the previous year.
Now, the rise largely looks so to have been down to online again. I mean, sales in stores fell. How worried are you about these bricks and mortar retailers?
I think these days we shouldn't think of them as separate channels, because we all as shoppers research online, buy in store or click and collect, and so there is a big blurring, if you like, between the two. So actually it's the total sales that's important. I think the challenge for those that operate stores is really around they have a higher cost base and just making the logistics and the economics of that actually work.
And clearly, I mean, Next last week issued a profits warning in which they were flagging lots of headwinds for the current year. They got a business rates revaluation, apprenticeship levy, national living wage. I mean, these are all big pressures, not just on Next, but on everyone, really.
They are, and they are big pressures that sit right across the retail industry. And the other one that we have already feeding through, and we've seen that with the beginnings of inflation starting to raise its head, is the impact of the devaluation of the pound. So obviously a lot of what we buy in stores and online is imported from overseas, paid for in dollars and in euros, and so that has become more expensive for retailers to buy. So we see there are pricing pressures in the pipeline, so inflation is likely to tip up. Perhaps not overnight and not be a big spike, but yeah. Those are there.
Now, obviously, you talk for the whole sector, not for individual members, but I mean, it's quite clear that some of your members are responding to this in different ways. So Next, for example, say they're going to pass on these higher costs.
Yep.
Marks and Spencer on
Yep.
record saying they're going to absorb these costs.
Yep.
Is that really practical, though?
I think it will be horses for courses, so everybody will respond in a different way. So some retailers will take some of the hit, suppliers perhaps will take some of that cost too, and at the end of the day, consumers will as well. So, and how individual retailers respond will be different, but across the market as a whole, we are likely to see, we're now in our 4th year of falling shop prices. So, you know, that was always going to come to an end at some point, and I think we're likely to see that beginning to happen over the course of 2017.
So briefly, Helen, could one say that this was a last splurge by shoppers this Christmas before they batten down the hatches this year?
I don't know. I'm not so sure about that, because consumer spending is all about how much money people have got in their pockets, and that relates to the relationship between how much their wages grow and what happens to inflation. So it really depends on that inflation equation and how much feeds through into the market, whether or not they will end up reining in their spending.